A very good afternoon to you. Thanks for joining. I'm Rachel and you're watching 𝐊𝐴𝐼𝐼 TV live from Sydney. This is the last show of the day, the last trade. There's no better way to wind down the day than with today's market close commentary, so let's dive straight in. The Australian share market ended lower on Thursday, snapping a 3-session gaining streak as caution prevailed in the market ahead of a key update on the US monetary policy. Federal Reserve Chair Jerome Powell will deliver a speech at Jackson Hole this Friday, which is expected to bring more clarity on timing of the tapering plans. Meanwhile, coronavirus concerns showed no sign of abating in New South Wales after they reported 1,029 new locally acquired cases in the past 24 hours. That's the highest daily number ever recorded in Australia. Investors also reacted to corporate earnings reports of big companies such as Whitehaven Coal, Ramelius Resources, Appen, A2 Milk, Qantas, Woolworths, St Barbara, Eagers Automotive, Linc amongst others. The ASX 200 closed 0.54% lower, crossing below its 20-day moving average. During the day's trade, the index declined as much as 0.7% to hit an intraday low. The market breadth indicating the overall strength of the market was weak, as 9 of 11 sectors ended bleeding in the red. The utility sector emerged as the worst performer with 2.2% loss, followed by materials, which fell 1.5%. Among others, tech and healthcare sectors also ended over 1% loss. Amongst others, consumer staples, energy, industrials and the financial sector also settled lower. Meanwhile, the telecom sector emerged as a top performer with 0.8% gain, pairing previous session losses. The consumer discretionary sector also settled in the green with a 0.4% gain. On that note, let us shift our lens to the top gainers and losers of the day. Among the individual stocks, Australian health supplements company Blackmores emerged as a top gainer by rising 15%. The vitamins group reported 90% growth in net profits at $28.6 million for the 2021 financial year. It also announced to pay a fully franked dividend of 42 cents per share. Some of the other notable gainers were coal miner Whitehaven Coal, resource firm Iluka Resources, retail travel outlet Flight Centre Travel Group, and domestic carrier Qantas. On the flip side, software company Appen was the top laggard with 21.35% loss. Some of the other worst performers were superannuation business Linc Administration, infant formula company A2 Milk Company, financial services firm IOOF Holdings, and Platinum Asset Management. Moving on now, let us focus on shares that hogged the limelight today. Linc Administration, their shares plunged over 12% after they released their financial year 2021 annual financial report. The superannuation fund's net loss widens to $163 million, while revenue dropped 6%. The company has also declared a fully franked dividend of 5.5 cents per share, which will be paid on the 20th of October. Shares of software firm Appen topped the losers chart by falling as much as 21%. That was after their disappointing earnings results. The profit more than halved to $6.7 million during the first half of the year as customers allocated resources to new non-advertising projects. The revenue dropped 2%, but the company also declared an interim dividend of 4.5 cents a share. That was in line with the dividend paid a year ago. The share price of premium branded dairy nutritional firm, the A2 Milk Company, plunged as much as 14.6% to $6.24 after a sharp drop in its profit for the financial year. The New Zealand-based company's profit declined almost 80% due to supply chain disruptions caused by the COVID-19 pandemic. The slow growth in its main market, China, also impacted earnings. Revenue fell 30.3%, while earnings before interest, taxes, depreciation and amortization slumped 77.6%. The company didn't declare a dividend for financial year 2021, citing market volatility and potential opportunities to reinvest in growth and supply chain. On that note, let us take a small break, but stay tuned with me on 𝐊𝐼𝐼 TV. I'll be back in just a moment.
Hi there, James Preston for 𝐊𝐼𝐼 TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TechBeat has the latest in what matters in the world of technology. Join me every single Thursday on The TechBeat, exclusive to 𝐊𝐚𝐥𝐤𝐢𝐳 TV.
Hello, welcome back. I'm Rachel and you're watching the market closing commentary. We're discussing companies that are in the news today. Qantas Airways shares rose 3.7% to hit an intraday high of $5.05. That's after releasing their 2021 financial results. The country's largest carrier by fleet size posted a substantial full-year loss due to the coronavirus-led lockdown, but it started the new financial year in a solid position and managed its recovery. However, the company hasn't declared any dividend for the year as travel restrictions are still impacting business. Shares of gold miner St Barbara declined as much as 3.8% to $1.52 after halving its final dividend for the financial year 2021. The company also declared a final fully franked dividend of 2 cents a share, half of the final dividend it paid the previous year. The mining company reported a statutory loss of $176.6 million for the year due to a hefty impairment loss of assets. The revenue dropped 11% due to lower production at Leonora in Western Australia and Simberi in Papua New Guinea. Shares of Eagers Automotive dropped 3% to hit a low of $16.25, despite reporting strong earnings. Earlier today, the shares of the automotive retail group opened higher and rose over 2%. For the 6 months ending on the 30th of June, the statutory profit after tax jumped multifold to $202.3 million, compared to $11.8 million in the same period last year. The surge in profit was driven by strong demand for new and used vehicles due to favourable economic conditions and social trends and consumer behaviour changes. Boosted by solid earnings, the company has declared an interim dividend of 20 cents. Shares of WiseTech Global continued their gaining streak for the second session after it raised its guidance for financial year 2022. The tech stock surged as much as 58.3% to hit a 52-week high of $57.31 on Wednesday. The logistics software solutions provider has projected financial year 2022 revenue growth of 18 to 25% and EBITDA growth of 26 to 38%. Shares of Buy Now Pay Later major Afterpay fell for the second day on disappointing earnings. Australia's largest fintech firm reported a net loss of $159.4 million in financial year 2021. That's compared to $22.9 million in the last fiscal year. The spike in the loss was attributed to a rise in annual marketing cost as it's expanded the business into new markets to cash in on the pandemic-driven boom in demand for BNPL services. Meanwhile, revenue rose 78%, while operating income, or EBITDA, fell 13%. Another BNPL major, 𝐧𝐞, also reeled under selling pressure as investors booked profit. The stock rose almost 2% on Wednesday after it released its earnings for 2021. The company's annual loss ballooned while its revenue surged by 150%. On that note, let's take another small break, but stay tuned to 𝐊𝐚𝐥𝐤𝐢𝐳 TV. I'll be back in just a moment. Welcome back. I'm Rachel and you're watching the market closing commentary. Now in our last segment, a look east. Asian markets are trading lower today, undermining firm cues from Wall Street as coronavirus concerns continue to weigh on investor sentiment. The caution also prevailed in the market ahead of a key update on US monetary policy on Friday. The Hang Seng, the benchmark index of Hong Kong, was the worst performer in the regional market with 1.5% loss. It was followed by Indonesia's Jakarta Stock Exchange, which dropped 0.9%. In a similar trend, South Korea's Kospi declined 0.7%, while China's Shanghai Composite fell 0.5%. The Straits Times Index in Singapore also traded marginally lower. Bucking the trend, Taiwan's weighted stock index and Japan's Nikkei edged higher. India's BSE Sensex rose 0.2% in opening deals. Moving on from Asia now to the US, Wall Street extended a rally in overnight trade amid rising optimism that the approval of Pfizer's COVID-19 vaccine would accelerate global economic recovery. The Dow Jones rose 0.01%, while the S&P 500 gained 0.02%. The Nasdaq Composite ended 0.15% higher. Let's now take a quick look at the crypto market performance. Cryptocurrencies edged lower during Asian trading hours on Thursday, with popular coins such as Bitcoin, Ether, Dogecoin and Cardano witnessing low volume. The digital coins consolidate near highs as overbought conditions as well as regulatory concerns kept investors sidelined. The cryptos are expected to further consolidate ahead of Friday's option expiration date, while investors will also keep an eye on the Federal Reserve's annual Economic Policy Symposium. The price of Bitcoin, the world's largest crypto by market capitalization, fell almost 1%. The most popular coin has rallied around 9% in the last 1 week after months of weakness. Ether, the world's second largest crypto, was also down almost 1%. Cardano, the third largest crypto by market capitalization, dropped over 3%, while XRP slipped 0.5%. Meanwhile, other known digital coins such as Dogecoin, Stellar, Uniswap, Litecoin and Bancor also witnessed selling pressure in subdued trade. In a fresh development, Binance, the world's largest cryptocurrency exchange, has suspended futures and derivatives products offerings in some countries as it faces scrutiny. European countries such as Germany, Italy and the Netherlands have prohibited Binance from opening new futures or derivatives products accounts. In recent times, the company faced scrutiny from various countries such as the US, the UK, Thailand, Malaysia and Japan because of excessively high fraud rates. The company has proposed to set up an anti-money laundering requirements with immediate effect to harmonise crypto regulations. Well, that's a wrap for today. I'll see you tomorrow on 𝐊𝐚𝐥𝐤𝐬𝐧𝐞 at 10 a.m. Stay safe and have a lovely evening. I'm Rachel, signing off.